Hello, students, professionals, and other interested parties from other courses. This is your tutor CPA Dunochoi under the YouTube channel CPA Dunochoi and other social media platforms, that is Facebook and Twitter, Instagram, and other social media platforms under the same name. So why am I mentioning this? If it's YouTube, I would like to request that you subscribe to my channel. Go to the other social media platforms, try to follow me, and at the same time create awareness to the accounting students that there's this number one channel for accounting, which provides sessions for financial accounting, financial reporting, and advanced financial reporting. So today I would like to look at the advanced financial reporting and analysis, which was done in August 2022. That is an exam which will be released in a week's time, not even a week's time, maybe Tuesday there, as I guess. Let's look at that paper, August 2022. So we have already done in our previous videos one question, that is a question 4, concerning reconstruction and reorganization of capital structure. So today I would like to look at question 1, whereby you are supposed to do consolidation, and at the same time, specifically that is, you are supposed to do the NCI and statement of financial position. So let's read that question. We interpret a bit. We do the presentation. They say B Limited, Public Limited Company has held a controlling interest in S Limited, another public limited company, for 1 decade. B Limited also has a significant influence over a public limited company, or the company operates in the manufacturing sector. The draft statement of financial position of P Limited and S Limited as at 30 June 2022 were as shown below. You are given a P Limited statement of financial position and S Limited statement of financial position. Additional information number 1, you are told that on 1st July 2012, P Limited acquired 60% of the ordinary shares of S for cash consideration of shillings 10,000 million. So meaning that S is a subsidiary because the percentage is more than 51. The percentage it was acquired up to is more than 51. They continued saying that as acquisition, the fair value of the non-controlling interest in S was shilling 6,500. So when P will be computing the goodwill of S, it means that it will have to use the full method. And that is due to the fair value of the non-controlling interest in S, which has been provided. P Limited wishes to use the fair value method of accounting for goodwill. That is the same thing I've said. On 1st July 2012, the fair value of the identifiable net assets in S was 14,000. So meaning that the identifiable net assets as at the time S was acquired, it was 14,000. Where shillings 1,200 was to the retained earnings. So they said that, and the retained earnings of S Limited was shillings 1,200. The excess in value was due to non-depreciable rand. I will come to clarify that excess, where it was arising from, when I will be doing the goodwill of S. So additional information number 2, on 1st January 2022, P Limited acquired a further 20% interest in S Limited for a cash consideration of 3,000 million. S Limited reported a profit for the year ended 30th June 2022 of shillings 500 million, which are accrued evenly throughout the year. Number 3, during the year ended 30th June 2022, P Limited sold goods to who? So sold goods worth 2,000 to S. P Limited reports profit margin of 25% on all it sells. So when P is making a sale, he always includes a profit of 25%. They said in the last sentence, in that note 3, a half of these goods were still in the inventory of S as at 30th June 2022. Here we are supposed to check out of the goods which S received from P, and by the end of the year he never resold them, which is a half of the 2,000, because That is the value of the goods which S received from P. So by the end of the year, S never resold a half. He never resold a half of the goods he received from P. So meaning that the profit which P realized, it has not been realized entirely by S. So we need to check the unrealized profit on the unsold goods in S so that we adjust our profit in P, because the profit of P will be overstated by what S never realized. And at the same time, we have to adjust our stock. Number 4, goodwill was tested for impairment immediately after the additional acquisition of the interest in S Limited was considered impaired by 10%. No impairment had been reported in the previous years. So that is just an impairment. Number 5, on 1st July 2015, that is some times back, B Limited acquired 30% of 1,000 ordinary shares of S, not S, they said. P Limited acquired 30% of their 1,000 ordinary shares of shillings 10 each in A Limited. When the retained earnings of A Limited stood at 1,000, A Limited had no other reserves as at 1st July 2015. As at 30th June 2022, the retained earnings of A Limited were shillings 3,500. No impairment was deemed necessary in respect of the investment in A. So when an entity is acquired by the parent company and the percentage rise between 20 to 49, the other entity is called an associate. Like now in this scenario, A was acquired up to 30%, meaning that A is an associate. How do we account for the associate? How does the parent account for the associate? It has to use equity method, whereby the associates are measured with the initial cost of investment. We add the share post-acquisition profit or reserve, we deduct the impairment, and that one will be done when we will be doing the statement of financial position, which is the second requirement, so that the net investment in A will be recorded as a non-current asset. Number 6, none of the group companies declared or paid dividends during the year. Number 7, none of the group companies issued additional shares required to determine non-controlling interest in S as at 30th June 2022. 6 marks. Let us do that one first. So, but remember that here, P was acquiring S. P was acquiring S. In some times back, he acquired 60%. Then later, it added 20%. That is during the year. So meaning that by the end of the year, it was 80%. So when I will be doing my NCI, what you need to know, in the first 6 months, the NCI was 40%. But in the last 6 months, the NCI changed. It reduced. A reduction in the value of NCI, the reduction to 20%, because the acquisition by the end of the year was 80%. So I will have to put into consideration all those explanations when doing the NCI, the reduction in value of the NCI. So here, remember that our financial year runs from 1st July 2021 to 30th June 2022. 30th June 2022. So on this question, you are required to do the non-controlling interest. So let's just arrange our work well. So non-controlling interest. So the non-controlling interest in S. So what you are required to do first is all about you record the first item being the NCI as at the fair value. So in short, this is how you are supposed to do it. So you start with the NCI at fair value. That is as acquisition, NCI at fair value, at acquisition. So at acquisition. So again, I need to push this one. So 6,500. So as at acquisition, when S was acquired, according to note 1, you are told that in that additional information number 1, you are told that the second sentence in note 1, at acquisition, the fair value of the non-controlling interest in S was 6,500. It was 6,500. So after starting with the NCI at acquisition, now we need to add the NCI as at the time they added the 20%. The 20% was on 1st January 2022. So 6 months, we have 6 months. So I need to add the NCI post-acquisition net assets. NCI post-acquisition net assets up to 1st January 2022. So let me do a short interpretation here. So talking about the net assets, what I would be considering most is concerning the retained earnings provided. Retained earnings, which was provided there. So of which, remember that as at the end of the year, I'm using the same number line which has been drawn here. As at the end of the year, the retained earnings provided in the statement of financial position is 5950, of which in the additional information, when they added the 20% interest, they said that in note 2, S Limited reported a profit for the year ended 30th June of 500, which accrued even throughout the year. So meaning that the 500 is inclusive here. The 500 is inclusive here because even that one accrues throughout the year. The 500 when they added the 20% interest. So meaning that they gave us the 500 which accrue throughout the year. That is what they said, which accrued evenly throughout the year. You can go and read additional information number 2. So what am I supposed to do in this calculation of mine here in order to get the post-acquisition net assets up to 1st January 2022? So what I'm supposed to do is all about, first I will consider, I will have to consider the relevant percentage of NCI which was there up to that 1st January 2022. Remember that this entity called S was acquired 60% sometimes back. So meaning that by the time they are adding the 20%, the NCI was 40. Up to that January, the NCI was 40%. So I will have to take 40%. We multiply what? The post-acquisition net asset, which is the retained earnings which I'm using. Here, I have to consider first up to 1st January 2022. Obvious, that is what I am considering generally. So meaning that to get the post-acquisition, how do you get post-acquisition? So post-acquisition is all about you take the balance carried down minus balance as acquisition. The balance as acquisition. Meaning that if I deduct the 500 first from this 5950, I would get 5450. Then I minus, because yes, I will be considering this for the first 6 months, but now I have to do the way it's supposed to be done. So I would take the balance carried down, which is 5450, exclusive of the 500, which was accruing throughout the year. So 5450 minus the retained earnings as acquisition in S, and that one is provided in note 1. If you read, you will see 1200. Then I would have to add now the 500, but I will consider it for the first 6 months. So 500 times 6 over 12. So 500 times 6 over 12. So if I take 5450 minus 1200 plus 250 times 40%, that is 1,800. So 1,800, that one is added. You add that one. So 003, that is 8. So that is the relevant NCI which we have as at 1st January 2022. So meaning before I consider now the last 6 months, because it's all about 500 times the relevant 6 months times the percentage, before I consider that, remember that in the last 6 months, our NCI did what? Reduced. Because now, the percentage of acquisition by the end of the year, it increased from 60 to 80%. It increased to 80%, meaning that the NCI reduced it to 20%. So I have to raise the proportionate reduction in NCI. So if I take 40% minus the 20%, then over the total 40%, the reduction in NCI times this value, 8,300. So I will be able to get my answer, the proportion, the reduction in NCI. So that is 20 divided by 40 times 8,300. So I get 4150. Then, so that is the reduction, the proportionate reduction in NCI. After that, we need to add NCI share. Looking at my question, I have to add the NCI share of post-acquisition net assets. NCI share of post-acquisition net assets. Post-acquisition net assets. So with this one is very simple, the post-acquisition net assets. For the 6 months, for the last 6 months. So which is, remember that this 500 was accruing for the entire year, of which it arose after the acquisition of the 20% extra, even if it was accruing for the entire year. Remember that we considered for the first 6 months, plus the other retained earnings. Now here, I need to consider again the 500 for the last 6 months. So I have to say now 20%, because this 20% now is arising due to the NCI which reduced. Remember that initially S was acquired up to 60%, then they added the 20. So the total was 80% by the end of the year, of which that one implies that our NCI is 20%. The NCI is 20%, the one we have recorded there. So we take 20% times 500 times 6/12. So if I take 250 times 0.2, 250, 0.2 times 250. So I will be able to get the 50. I will be able to get 50 here, the one which I had already recorded there. That is how we arrived at that. So the next thing now, or the last thing to deduct here, is the NCI share. NCI share of goodwill impairment. And this one takes me to the next step of doing goodwill. So goodwill, I said that we are supposed to use full method. We are supposed to use the full method, or we call it fair value method as per the question. Fair value method. So how do we go about it? So we start with the purchase consideration. So the purchase consideration, as per the time S was acquired, remember that this one is for S Limited. As per the time S was acquired, that is not 1, the purchase consideration was given as 10,000. So what am I supposed to add here? So according to the question, we are supposed to add, according to the question provided, we are supposed to add the NCI at fair value. NCI at fair value of acquisition. And this is the main item which made the calculation of goodwill. We use fair value method. So this is the main item which was provided so that it guides us which method to use, the fair value of NCI. So it was 6,500. So you add to 10,000, you get 16,500. Then you raise identifiable net assets. So identifiable net assets, the total value was already provided, identifiable net assets at fair value. We were given already the total value being 14,000. But now I need to prove where this is coming from. So we consider the first item being ordinary share capital. Share premium, retained earnings was the third item. But the retained earnings, remember that the figure you pick is as acquisition. So the ordinary share capital from S Limited's statement of financial position is given as 10,000. Is given as 10,000. Share premium is 2,400. Then the retained earnings of S, as at the time it was acquired, as per note 1, it is 1,200. So there's something to be recorded here, which is this something I'm talking about. So remember that the total net assets, the identifiable net assets, is 14,000 according to note 1. Even if I can read, they said that the fair value of identifiable net assets in S was 14,000. That is on 1st July 2012. The fair value of the identifiable net assets in S Limited was 14,000. So if I add these net assets, which I have recorded from S, do they sum up to 14,000? Now adding, I'm getting 13,600, meaning there is a difference of 400. And that 400 is the one which they mentioned in note 1, the last sentence there. They said the excess in value was due to non-depreciable rand. Non-depreciable rand. So that one is what to be recorded here. So we say that add fair value uplift. Fair value uplift, which is all about concerning rand, which is our balancing figure. So if I take 16,500 minus 14,000, 16,500 minus 14,000, so 16,500 minus 14,000, I can be able to get 2,500. So that is goodwill before impairment. Then impairment as additional information number, so let's check in our question here. Additional information number 4, they said goodwill was tested for impairment immediately after the additional acquisition of interest in S and was considered impaired by 10%. No impairment had been reported in the previous years. So impairment is 10%. So 10% of 2,500. So that one we get 250. So if I minus 250 from 2,500, I get 2,250, which is net goodwill. So net goodwill will go to the statement of financial position. When I will be doing the statement of financial position, this one we have to record under non-current assets. So the NCI share of goodwill impairment is all about 20% of 250. So 20% of 250, because the impairment is 250. So that is 50. So that if I take 8,300, minus 4150 plus 50 minus 50, I can be able to get the answer being 4150. So here they were marking this way: entry, 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 entry. So we have how many entries? 1, 2, 3, 4, 5. This question, this part A, that is, part A was requiring 6 marks. So of which they needed only 3 entries. So that is any 3. They multiply by 2. You get the 6. So out of the 1, 2, 3, 4, 5, we were in need of only 3 correct entries. So in our next video, I would be able to do part B of that question, that is on how you are supposed to do the consolidated statement of financial position. What I can urge you as a student, my online classes are ongoing. Welcome. We do live classes where we can be able to interact more. You are required to ask many questions as possible. So just contact me through 0728 760 546 so that we can agree on the way forward. Thank you for your time. Thank you for the contribution you always do and for the attention you provide to this platform. Share my video to other colleagues and many more students who could like to join. Refer them to my class using the same number. My social platforms are CPA Choi, whereby again we can be able to interact more. Thank you.